Welcome, everybody. My name is Paolo Sironi, and this is another episode of the Banker's Bookshelf. The Banker's Bookshelf is our opportunity to learn from researchers and authors of the most interesting papers and books that discuss how banking is being transformed by technology. And today I have the pleasure to have with us the author of Designing Change, My Journey Through India's Digital Payments Transformation. His name is Balakrishnan Mahadevan, that I will synthesize in Balu. That is easier for me to pronounce. Balu, welcome to the Banker's Bookshelf.
Thank you so much, Paulo. I look forward to the conversation.
Paolo, I'm very excited that you decided to join the Banker's Bookshelf today because the topic is definitely interesting. We can reflect with Balu about the last 10 years or more of innovation in payment that occurred in India. Now, innovation doesn't really happen overnight. It's a series of moments, events, decisions, some right, some wrong. And now we have the opportunity with Balu to reflect back on what effectively happened in India that propelled India to such an extraordinary transformation in terms of the payment landscape. Balu has tons of experience, is a former executive of the NPCI, the National Payments Corporation of India, and the World Bank. So he has first-hand experience to describe to all of us what really happened in a way that we can be better informed in thinking and in designing the future of payments elsewhere in the world. Balu, let's start telling the audience why should they read your book?
So this book, the India's digital payments is something which is now globally known. We have moved from 1 billion retail digital transaction across all products and services to more than, in 2010, to more than 225 billion transactions for the year ended March 2025. 225 times growth in 15 years is not heard in any country. Right? Therefore, the transformation has been humongous, huge, and every country is talking about it. Anything which in comparison is Brazil's Pix, which is also doing phenomenally well. So therefore, these two payment systems are something which world is looking forward to, especially the countries little bit of not forward in terms of improving the financial infrastructure. This growth in India didn't happen overnight. Right? It happened over a period of 25 years. To take it back, I had the advantage of seeing the whole payment system development in India using different vantage points. Initially, I was working for the banks, connecting the banks to the payment systems in that country. Right. In the year 2000, I was working on a product called Citibank Global Transfers, which could move money from any Citibank account in the US or Europe to Citibank account in India online, real time, even before the word faster payment was coined. And this cross-border instant remittances, of course, within Citibank, met most, if not all, of the SDG goals, which we are even today struggling for cross-border payments. So that got me thinking. There is so much can be done with payments in 2000. So I started reading more about payments, understand more about various aspects of payment. Then I wrote a paper in 2006 in terms of if India has to become the global leader in payments, what are the things we need to do in 2006? I wrote that. And that catapulted me into a payment expert in the country. It was published in the largest banking magazine in India, which is called the Indian Banker. And therefore, suddenly I became, known as a payment system expert, and I got invited for a lot of meetings and all that. One of the things I suggested in the suggestion in my paper is that if the retail payments have to grow, there has to be a specialized institution which will promote the growth of retail payments in the country. So the seeds of National Payments Corporation of India was laid in my article in 2006. In parallel...
Okay, so Balu, for a moment, because a lot of very important concepts. So basically you said you looked at how payments try to be transformed by centralized institutions like Citi. You found that very interesting. Then you wrote a similar paper in 2006 that addressed how that can be applied at scale for the whole economy, for a big country like India. And what you said is that required the existence of a centralized institution that could promote change the right way, because that might be necessary to aggregate, I presume, an whole ecosystem in an ordered way around this important task. Now, what it is that you know today that you didn't know back then that instead, is business critical?
So I knew that if anything has to work, there has to be a specialized agency working towards on making that happen. These days of specialization. So if the payments in India has to grow, RBI cannot be running the retail payment system in the country. As a regulator of the banking system, RBI is Reserve Bank of India, could perhaps run the large value payment system, but then retail payment system has to be handed over to a specialized institution which will focus on that. So that was that's what I wrote about in my paper. That was the vision of RBI too. In parallel, they also came out with the vision statement in 2005-6, and they also said that there has to be a national institution. So therefore, it was critical for India. Without the NPCI, we wouldn't have reached where we are today. I think, I completely support the National Payment Corporation of India creation. But what is important, I realize after years, working with World Bank and many other countries, is that the construction of NPCI, how the whole institution was, conceived and constructed. So first is it was owned by the banks. Therefore, the ownership was with the banks. 10 large banks in the country, which comprised of 6 public sector banks, is government banks in another way to say it, 2 private sector banks and 2 foreign banks. They were the initial shareholders of National Payments Corporation of India. The idea behind that being the best of the brains from these 10 institutions should be working together to make the payments, widely available and accessible in the country. So that is one big lesson, the collaborative approach of the banks to make it happen. That's one. The second thing which really appealed to me is that we knew that at that point in time, given that we had only less than 1 billion transactions across all channels, all retail payments, including debit card, credit cards, electronic fund transfers, electronic clearing systems, and all that, we had only less than 1 billion transactions in the year 2009-10. So therefore, we knew that there is no place here for multiple institutions to do these payments, right? So therefore, the institution which we will create, like NPCI, will be a monopoly in nature for some time to come. So therefore, we wanted to do the construction of NPCI as a not-for-profit entity. In India, there is a construct called not-for-profit organization. So it will be a company under the Companies Act, but this company cannot distribute dividend to the shareholders. So whatever profit they make, in fact, they don't even use the word profit, whatever surplus income they make, it is supposed to be reinvested in furthering the cause of the organization. So that way ensure that there is no rent-seeking behavior from any of these participants. So this organization could therefore work towards the betterment of the industry as a whole, collectively. And that's how the whole NPCI started. And to tell you the truth, NPCI started with less than $5 million as capital at that point in time.
Wow.
And today startups burn much more every day.
So, Balu, everybody expects innovation to hit the market and transform everything in a very short term. Effectively, this is not the case. And the Indian payment is this example. You said it started more or less 25 years ago. It went through a series of waves. It requires some key pillars to drive through the long term this type of change. And which are these elements that allow success, these ingredients that you believe every country needs to have since the very beginning to make sure that it can go through this journey in a successful way?
Wonderful question, Paolo. There are 3-4 key elements which made the whole NPCI creation and its working is a huge success. One is, as I said, creating a separate institution focusing on retail payments, promoted by 10 large banks in the country who had a 70-80% of the market share. So that is one. The second thing is the construction of the company is not for profit in nature. Therefore, they could work, although they're monopoly, they could work in the interest of the entire banking community. That is second. Third thing NPCI had was a visionary leader. It is Mr. Narayana Murthy, former chairman of Infosys, or the first chairman of NPCI. He was a visionary strategic leader, right? He put the foundation for what NPCI is today, and he ensured that the first 4 years of NPCI operation, he protected the organization from all external undue influences, for that matter. So he laid the foundation and strategy of NPCI. And the fifth thing I would say, there are sort of committed individuals who moved from the private sector to this national organization to contribute something towards the development of the nation. Okay. I used to work for a multinational bank at that point in time. And I had an option to either go back and join NPCI and do something for India, or go back, further only my career progression by working for a JPMC or any other multinational. But I thought, it is important for us to contribute to the development of the nation. So there were so many like-minded people who were excited about the idea that we could contribute something to the nation, which will one day become, globally spoken about, globally, valuable for every other country. So I would say those are the key factors which made NPCI a success. So we had a strategy laid out in terms of vision. In fact, our vision was very simple. Every Indian should use one or more of NPCI services at least once every day. So that was the vision. So 1.4 billion customers. So everybody uses one transaction. We are talking about 1.4 billion transactions a day. That is our vision. A very simple vision, right? And that time we didn't even have one transaction per customer per year digital. So that's where we were, right? So that is the vision we laid out. And we ensured that we would have all the products and services a growing economy would need. So we started initially with improving the check clearing system. We implemented the check truncation system or check image-based clearing system. We ensured that that is the largest widely used instrument in the country at that point in time in 2010, 1.6 billion transactions. So we automated that, so there is no float in the check clearing. Your check will be cleared in T+1.
So Balu, I do love the way you spell the vision, because it's at the same time very ambitious and very simple. We want that every Indian can use one NPCI product at least once during the day. So it's not very emphatic. It does not, fill your heart, but in reality, resolves the real problem of allowing people to start transacting in easier way, being part of a broader ecosystem, because it's a collective effort of everybody. Everyone contributes, from the clients to the providers. And in designing change in your book, there's a very interesting concept that tries to crystallize it all, and it's called combinatorial innovation. So what is the combinatorial innovation that allowed the Indian payment to fly and be successful as we see today?
So wonderful question. So I mean, just to give a couple of minutes. So before we started the UPI, which I talked about combinatorial innovation, right? So we had done this something called reverse innovation before that. So the IMPS is what Professor Vijay Govindarajan of Dartmouth, public, strategy expert from Dartmouth. He talks about developing nations leading in innovation and developed nations taking from that. So our IMPS, which is the faster payment system we implemented way back in 2010 on the lines of cheap and global transfers. Now, I think UK did faster payment in 2008. We used a similar construct and built IMPS in 2010. So in 2010, we called it reverse innovation, right? We developed and other countries picked it up and move on. What we did with IMPS is that we knew that a country like India cannot spend $500-600 million to develop a faster payment system. So we wanted to reuse all the existing components and connections to reuse and rebuild a system which can be useful for the consumers. So we used exactly the same construct like Vocaling in UK. We actually leveraged the NFS ATM network, for which 60 odd banks are already connected. So we knew that all new ISO 8583 message format, 60 banks are already connected, the connection was there. So we leveraged the 200 message format and created the first faster payment system in India in 2010, right? Very frugal innovation. We spent less than $5 million across the banking system to do that IMPS. That happened in 2010. We called it reverse innovation. Then we put so many other systems in place. As we go along, we said a check truncation system we put in place. We put in place National Automatic Clearing House for direct debit, direct credits, including same-day settlement options, right? And then the UPI moment came, right? The UPI is actually has two components. And broadly, we're talking about UPI. It has two components, the front end and the back end. The front end is the one which has developed afresh. The back end continues to be the back end rail used in IMPS. Exactly similar is what you're using. The actual movement of money happens using the same IMPS rail we created in 2010. Right. So when UPI happened, initially, 2016 it is launched, right? UPI was not immediately successful. So what we learned in India, every new payment instrument takes a bit of time for people to understand how it works, and then only the adoption and the usage grows, right? So my promise to the board of NPCI, they always, whenever a new product is launched, the first question they ask is when you reach 1 billion transaction. So the only answer I used to tell them, not in terms of months, the only thing I used to tell them, I will be faster than the previous instrument. So if previous instrument took 8 years, I will make sure this is much faster than that. So IMPS reached 1 billion transactions in about 5 years. UPI reached it in 3 years, right? In order to get UPI to where it is today, I will talk about a couple of minutes and then get into combinatorial innovation, right? There is a technology adoption model which you will be familiar with, right? They talk about two key factors which is contributing to any digital products adoption. The first one they talk about is perceived usefulness. Right, obviously, ability to send money instantly, 24/7, right, using mobile phone, sitting anywhere you are, so long as the mobile connectivity is extremely useful for the consumer. Right. The second thing was perceived ease of use, how easy it is for you to do transaction. right? The UPI adoption really, shoot off only after they implemented a QR code based merchant acceptance solution. Then what happened was payment to the merchant became just scanning a QR code and clicking a button, because mobile had a two-factor authentication built in already. So that made, perceived, it's not perceived, it's actually actual, ease of use also improved with
realized
QR code, right? Yeah. And the third thing which helped is, although India also allowed a third party to initiate transactions in UPI, money remained with a trusted institution. It was actually open banking concept. So the money, you might use a Google Pay or a Phone Pay or a Amazon Pay to initiate a UPI transaction, but those organizations do not touch customers' money. Customers' money remain in a regulated institution in India. So these three factors contributed to UPI success, right? When the UPI success became so phenomenal, to the extent that today we are doing 20 billion transactions a month. So you're pretty much reaching that, one customer using one or two NPCI service every day. We are kind of getting in there. We do about 600 million transactions. Once you double it, we will get there. So when this happened, there were a lot of people taking credit for UPI, because it is hugely successful. I joined a postdoctoral research program in IIM Bangalore. So I met the so many architects of UPI, kept saying, they're the architect for UPI, right? Every second person I met in Bangalore, they say he's architect of UPI. And I found it fascinating, if there's so many people contributed. So I wanted to test a little bit in terms of depth, what kind of depth they have in terms of saying this. So I kept asking them, can you tell me what is the innovation in UPI? First person said instant payment. So I had to demolish it, saying, no, it's done in 2010 in India itself in IMPS. And prior to that, Citibank has done Citibank Global Transfers in the year 1996, which I brought to India in 2000. So that's not an innovation, right? That second set of people came back and said,
okay, so a moment. So you said instant payments is not the innovation of the BI.
No, not at all.
Okay. That's good. That's for the message.
Yeah. And the second innovation people came back and said is, using, APIs to initiate transaction. I said, that's also not an innovation. I worked in Oracle database in 90s, right? They had something called a stored procedure, reusable software code. You must understand that, right? That is within the organization. Now you're extending that outside the organization. And the concept of API, Microsoft has come back and said much more earlier to UPI. So even that's not an innovation. That's a second.
Okay, so second, Paolo, we said API's innovation is not instant payment and it's not initiation of instant payment.
Using APIs, yeah.
Yes, so what is it?
Okay. The third thing they said is, a third party initiating, the transactions. So like, bulk of the UPI happens on a third party applications like a Google Pay and a Phone Pay and Amazon Pay, not on the banking applications. Typically, you initiate a banking transaction from a bank provided mobile application. Whereas in UPI, more than 85% of the transactions are initiated using a non-banking application, which we call third party application service providers. They said that's an innovation. I said, no, in 2007 itself, the open banking concept and third party initiation of services is defined in the European Payment Council. Europe has already defined, and 2012-13, they also come out with the detailed specification in terms of how to go about doing this. Open banking, payment initiation service provider specifications are out at that point in time in 2013. Therefore, that's also not an innovation.
Okay, so we said innovation here is not the real time, it's not the API, it's not the open banking.
Yeah.
So what
and
is
then
it?
They came back and said, the fourth explanation given to me is that using QR code is an innovation for making the payments for merchants. Then I said, no, QR code is also invented in Japan much earlier than that, right? And China has been using this, QR code based payments, much earlier. Therefore, QR code is also not an innovation.
Okay, so no real time, no API, no open banking, no QR code.
Yeah. Then I, explained to some of them what is innovation in UPI. That's where the concept of combinatorial innovation came into the picture. This combinatorial innovation is something which has been described by Vanover in 1945 or something. So it's combining different innovations and build a product which will be far more useful to the consumers, better than each of them individually. One classic example, your mobile phone. Earlier, I could have a phone, I could only talk. But you can imagine today what all you can do in the phone. The amount of features added to the phone. Are all of them innovations? No. Right? Camera was innovated separately, phone was innovated separately, radio was innovated separately, right? Scanning was innovated separately, right? Everything was innovated separately. But they put together everything into one instrument, which is extremely useful to the consumer. And that's what UPI is all about. Combinatorial innovation.
So the combinatorial innovation is basically the convergence of many different elements, and now they're mixed in a way that they extract new value that was not there before, that can be basically enjoyed by the whole ecosystem made of users, made of providers, merchants, technology companies, and that is what allows the whole lot to fly. So I love this description. It was very funny.
Absolutely.
Actually, sounded like a thriller. Like I was being excited here. Like, oh no, what is it? What is it not? So I enjoyed it very much. And knowing this, other countries are attempting with different perspectives to enjoy the same breadth of transformation. Some are developed nations, others are developing economies. What is the best advice you can give them? Presumably it's different, or maybe it's the same.
So before advice, I would say, I will try to probably, project my observations of, traveling to many countries and living in many countries and transiting through many countries, right? I see that the faster payments and instant payments are leveraged differently by different economies, right? Broadly, the developed economies, it is not becoming as popular as it is being used in the developing economies, right? For example, the reason for that perhaps is that there is already an existing system which is working well. For example, when I'm in the US, I'm able to travel wherever I want 1 month completely on a card, which I could use it for a $500 flight ticket, $300 hotel booking, even $1 coffee. I can use a
Starbucks.
card and I can run with it.
If there's a coffee for $1 in New York, I'm
It
not
is
sure,
still
but
there. I
maybe
think
some parts of the
the
US you can
donut
find.
company. What is that? I keep forgetting the donut company. They give you $1 coffee.
Okay, good.
You still have that. So I was able to do everything for a month only on a credit card or debit card, whatever that is. So therefore, there was not a compelling reason for them to have anything which is replaced. In typical financial services, you have been in the industry for a long time. If it's broken, don't fix it is paradigm. Right. So therefore, where things are working well, there is no incentive for them to change it. Also, the cost of those transactions are embedded into every single transaction. So therefore, they knew that if I'm accepting digital payment, there will be a cost to this. The cost is already added to the product. Therefore, they don't feel it, any need to replace that. So if you look at it, all developed countries, we don't see the traction of faster payments as we see in a developing nation. So let me take an example of UK. They implemented faster payment in 2008, right? Even in 2025, their total contribution to the digital payments is less than 10% of the total transaction volume, right? US spent $550 million to do Fed now, but we don't see the kind of transactions in a month we see in the whole year in the US, right? That is because
Are we imply some judgment about the digital euro?
I have not studied Europe significant, but there's a couple of countries probably, the digital payments are, digital payments are definitely looking good, even card-based payments are looking good, but the instant payments have not seen the kind of success you have seen it in the developing nations like Brazil or Thailand or India, even in Europe. I think probably the Scandinavian countries are an outlier. Their adoptions are far better. But other countries, I'm not too sure. If they're doing so very well, I really don't know why MasterCard decided to sell Nets again. They acquired at $4 billion. Now they're selling it again. So if there's a profitable business, why would they do that? Is a question which comes to my mind. Right. Anyway, so I find that the developing nations, so that's one thing I realized. Developed nations and developing nations leverage the faster payments differently. That's one I figured out. The second thing I figured out is if the well-entrenched acceptance infrastructure, changing that is very difficult. Therefore, people don't attempt this. The developing world, for example, India, we never had an acceptance infrastructure. It is the acceptance infrastructure, ability for people to pay at the merchant, which actually drives the adoption of digital payments. Not the account transfers. Account transfer may happen 1 time or 2 times in a month for me, but every day I have need to spend my money in metros and everything. So if you really want digital payment adoption to happen significantly, the role of acceptance infrastructure is extremely critical. The merchant should adopt it, the merchant should accept it, then only consumers will start using it everywhere. So that I found is the reason why the UPI succeeded big time in India. Prior to UPI, prior to the QR code based acceptance infrastructure, we have a different name for this. We call it asset light acceptance infrastructure because you don't need anything at the asset light acceptance infrastructure. You don't need anything at the merchant. All you need is a plastic QR code standee. Right, you just have a QR code print, and that's all you need. You don't need a terminal. You don't need a token. Nothing you need. Right, all you need is a QR code. So that catapulted India from less than 10 or 20 million terminals where I could do digital payments to 300, 400, 500 million places I can use the digital based payments. So that's one factor significantly helped. right? And that's kind of model which Brazil is also following, I think, right? The second thing helped is particularly in the case of India, since the government of India decided that UPI will be free for consumers because they wanted digital adoption to happen, they intervened, right? So there is no money for the ecosystem players, on the UPI transactions. Therefore, they did an innovation again. That's, I would say, as an innovation in UPI. So what they did was, instead of just simply creating a plastic QR code standee, they embedded a speaker onto that with a SIM card. So what happens is, and then they ensured that the transaction detail will be voiced out in the local language of the merchant. India, as you know, has some 50, 60 languages, right? So this QR code standee, which is a QR code of the merchant with a speaker attached with it, embedded with it, the SIM inside this. So whenever I make a transfer to that merchant, it will voice out 30 rupees received in the local language of the consumer, of the merchant. So that created significant trust among the merchants, and therefore they started adopting significantly. And that's how the developing world leveraged, because they never had an accepted infrastructure in the first place. It's akin to India moving from no phones to mobile phones instead of going through the same pager revolutions and then to the phones. I remember in 1989 when I moved to a city in Chennai, I applied for a telephone. I got the telephone in the year 2000. 11 years I waited for a telephone connection. Today, you go with your digital identity card, Aadhaar we call it. In 1 minute, you have a telephone connection, mobile phone connection, that is, on a smartphone. So those are the factors that help, generally for the developing world. So the developing world where infrastructure is not already there, I think QR code based and faster payment based acceptance infrastructure will definitely help them to catapult in a big way. In a developed world, I don't see this taking off in a big way at all, because the entrenched players have a different motivation and interest in continuing with what it is today. So therefore, they will not support.
Paolo, if there is something that I've learned today and I really didn't know, is that UPI is money that talks to you. That was unknown to me.
I couldn't hear that.
UPI is money that talks to you. Literally talking to you.
And one more reason in India, the digital payment, the UPI became success is because we constructed as a digital payment infrastructure. We didn't allow private parties to create that. We created the rails as a digital payment infrastructure, right? On which every other private people can innovate on top of this. I think that construct was extremely helpful. So that is one. The second thing, I think I talked about frugality, right? Why is that UPI is freely available to everybody at a very low cost or not cost at all? That is because the entire technology stack of UPI is on open source, right? Therefore, the cost of operations for UPI, not only UPI, the entire digital payments in India is substantially cheaper. To give an example, I had an opportunity to look at the annual financial statement of NPCI for the year ending 2025 March, right? They do 230 billion transactions in the year 24-25. 230 billion transactions across all products and services of NPCI. And their expense was only 23 billion Indian rupees, which is 2,300 crores, which translates that each transaction costs only 10 paise, which is substantially lower than even a cent. Of this 10 paise, half of it is their marketing expenses to promote the product. If you remove that, the actual operating expenses is only 5 paise.
Frugality.
Therefore, they're able to offer it free. And the other thing the government, articulated in terms of why are you giving it free? I mean, there's always this debate about, how do people make money? Why are you making it free? The rationale for the government is in a developing economy where things are not formalized to the extent it is required, UPI, the digitalization because of UPI has formalized many of the things into formal economy. As a result, the tax compliance has significantly increased.
Yeah,
right?
So you move the economy, that's your scope, right? You get a second order effect that is beneficial, but if you start from this, you will never get there, right? So just move the economy.
So therefore, what the government has done is, although they made it free for the consumers, the government every year is subsidizing or paying back the cost of this transaction to the financial institutions. Every year in the annual budget of Government of India, they calculate certain amount and say this is the cost of free UPI transaction for the financial institutions, and they reimburse to the banks, taking it as the cost of collection of taxes. Right, so that one significant benefit happened. The other benefit which happened.
That's interesting, because that is never discussed. That is really never discussed. This aspect of paying back as a tax rebate is never discussed. I never read it anywhere.
It's there in my paper. So, I mean, I will share with you.
No, I understand that, but honestly speaking, I didn't.
Mm-hmm. So the other benefit which accrue to the economy is that many of these MSMEs, for credit needs are always a challenge for any developing economy, right? Because you don't have any underwriting capabilities because they don't have a credit history, they don't have a credit bureau, they don't have a credit card, nothing, right? So what do they have? Nothing. So this UPI allowed the underwriting companies to understand their income and expense levels using the digital payment transactions, and then they could give loans based on this transaction cash flow, which also kind of improved access to credit by MSMEs, which also contributed to the development of UPI in a way. People suddenly realize, I'm not getting loan anywhere, but if I put a UPI terminal, 6 months I have transactions, somebody will come back and give me a loan. Right? I think those two factors also contributed. That's a societal impact of UPI. The cost of using cash went down. The ability to transact 24/7 improved. The ability to pay remotely improved. Or I can pay sitting here my daughter's examination fee. Right?
That's
so
very
all
good.
these factors also contributed to the growth of UPI. And India has probably one of the cheapest mobile data plans in the world. So therefore, using mobile data is also very cheap in India. So these are the contributory factors, I would say, apart from demonetization and the COVID, which actually propelled the UPI. The fact that India did something called a financial inclusion program, which is called Prime Minister Jan Dhan Yojana, which ensured that every adult Indian has a bank account. Right today, I think the Findex, World Bank Findex, they do survey of financial inclusion index. India has more than 90% of the consumers above age of 15 as a bank account. Right, so therefore it became that much more easier to bank account transaction. So there were so many underlying enablers which happened over a period of time, which catapulted UPI into what it is today. I just thought I'll highlight that as well. You can incorporate.
I guess your kids are more diligent than mine because my account-to-account transactions happen more than once a day. So that is my major platform motivation. So thanks for the fascinating conversation. We might want to wrap it up now. I invite everyone who attended this conversation to buy Designing Change, my journey through India's digital payment transformation, because with Balu, we really went to the source of it. We didn't discuss the buzzwords around it. We really got to the essence of what allowed the Indian payment system to transform so much, to be so successful, and to be a lighthouse for the world. Although we understood and we learned that there are differences in the ways a developed country or a developing country operates, because there could be some hubris or some attrition related to the past, the existing infrastructure. But notwithstanding, the idea of combinatorial innovation is powerful wherever you are. It is not about the single element. It's about the way you connect the dots with technology and also with business innovation, because allowing payment to be cheap or to be free is part of the stack and it's not just the technology piece. So Balu, where can people find your book? So the book is available on Amazon.com. It's available as a Kindle version as well. You search on Amazon.com, you will get it. And I hope they will deliver, everywhere in the US and every other place. I think it is also available in Amazon.Netherlands or something. I don't. It's definitely available on Amazon.com, and you should definitely get it delivered to you. I don't see a challenge of that. I invite everyone to get Designing Change, to connect with Balu on LinkedIn, and to spread the news that this was a wonderful The Banker's Bookshelf episode. I thank everyone for the time you dedicated to the conversation. The Banker's Bookshelf is our opportunity to learn from the authors and the researchers of the most interesting books and publications that describe the present of banking and its fintech future. Thank you very much. Arrivederci, and enjoy the jingle.